Alrighty, so we've concentrated our positions, deployed that 200K all into one position because just the APRs are juicier. We're back into that $20,000, $25,000 a month. Really want to bump this up to around $1,000 per day, but I'm happy with this. Now, our next step is to hedge this position. I'm going to show you exactly how. In today's video, I'm going to walk you through some portfolio management. We are going to rebalance some positions. I'm going to talk about impermanent loss, how I offset that with my short. As you can see, I'm almost $5,200 in profit here, which makes up for any impermanent loss. We're going to get our monthly income back to over the $20,000 mark. I'm going to walk you through all that along with show you how we hedge, how to calculate your hedges, and really just to protect against the downside. Rule number one is just don't lose capital. Rule number two is yields. Now, if you're a super long-term investor, you don't have to worry about hedging because you're investing in assets with long-term potential and you're in it for the next 5 years. Awesome, but not everyone is in that boat. So we're going to talk through that, and I'm going to make this video very, very practical. So the first thing we're going to do is we're going to rebalance this position. Now, I did have a $100,000 position on Aerodrome open, but it was underperforming. It was 40% returns, whereas this pancake swap position is doing 147%. So I exited that position, I closed my short, I recouped around $99,000. So we're going to take that, call it 100K, plus this $94,000. You can see my pool has lost $6,000 of value, but I'm up around $5,200 on this short. Now, please note, I was willing to take a $1,000 haircut. When I opened this $100,000 position, I said, hey, I'm not sure which way the market is going to go, but let me just protect against the downside, and I'll open a short at this price point, knowing that if the price of ETH went down, yes, my pool value would take about an $800 hit before my short kicked in. But again, I was more than okay with that. I'm willing to take a 1% hit, but have backup. If the prices do keep moving down, again, I have backup instead of having a short open right off the bat, which honestly, I did think the price of ETH was going to go up, but I was wrong. Now, instead of taking a $6,000, $7,000 haircut, I'm going to take an $800 or $900 haircut. Get under 1%, and I'm totally okay with that. That's how we think about it. You're going to say, hey, I think the market is going this way, but in case I'm wrong, here's what I'm willing to lose, and here's how I'm going to protect against being wrong. So first thing I'm going to do, I'm going to harvest this $1,000 in rewards. Done. Awesome. And then I'm going to remove all liquidities. So we're going to take a note here. 93582. I entered with 99800. Beautiful. I'm going to withdraw all 93582. Done. Then I'm going to go over to my short position here. I'm going to lock in this 5K profit. Done. So $5,093 minus fees. Confirm. And there we go. After swapping the wrapped ETH and ETH over for USDC, just to make the numbers easy, I got 1,999,261 USDC, so I am down around that 600. But don't forget, this portfolio has printed well over already $10,000, and my shorts have protected this the entire time. Now we are going to re-enter that wrapped ETH USDC position over on Pancake Swap. It's got about a $10 million TVL, so I'll zap over that 200K, and done. Now, as we wait for that, I do want to give you a quick little heads up. The first book we wrote, Crypto Wealth Without Wall Street, became an Amazon bestseller in like 6 different categories, including crypto and the Bitcoin markets in 6 different countries, online trading, and it even hit the top 10 in all investing books. If you haven't got a copy yet, get it. Now, I've had hundreds of emails and hundreds of DMs from people reading it, and I realized there's a few tiny pieces missing, and a lot of it just didn't make the book, or this would have been a 350-page book. So I am working on a second, and I've actually been working it since the book came out. Now, we will be giving that book out for free. It will be available on Amazon. Kindle will be free, and the actual published, like if you actually want a hard copy of our new book, it's much shorter. It'll probably be about half the length, but it's all the psychology and the mindset for investors and entrepreneurs, which to me is the exact same thing. Right now, the first draft is around 25,000 words. It's around 10 chapters, around 120 pages. And chapter 2 is actually one of my favorites. Think like Munger, avoid stupidity first. This quote by Munger has stuck with me ever since I got into this game. Tell me where I'm going to die, so I won't go there. Protect your capital. Do not lose. Avoid stupidity. What I see in this crypto game is a lot of people, or just in the investing game, a lot of people are throwing everything at one bet. So instead of using the big dexes and blue chip assets and minimizing their downside and maximizing their upside, it's all risk reward. Just like you see in this example. Unlimited upside, and I'm willing to take a 1% hit if I'm wrong. I want to protect the downside. I see a lot of people not really thinking through that. I want asymmetric bets. You're not always going to be right, but I just want to minimize that downside. That's what we're talking about here with the hedge strategy. Anyways, do leave mindset book below. We actually called it the investor mindset, and we're really just mastering the psychology and the way of thinking in 10 chapters. I almost think of this as like the missing chapters. The first book was 350 pages long. We had to cut it down to like 220. This is a lot of that missing mindset internal stuff. You can have all the strategies and all the right tactics, but if you don't have this dialed in, one wrong decision, one wrong click of the button can wipe out years worth of returns. We are planning on releasing this book sometime after Christmas, sometimes in the new year. And again, we're going to make it free. And what I mean by that is, yeah, we might have some PDF version, but if you do want to get it off Amazon, Kindle will be free. And the paperback, we're just going to set the price to be just whatever cost is. I don't know what Amazon cost is, but it'll probably be a few bucks for printing and shipping. And again, I'm really open to exporting this into a PDF and just giving it to you as well. So give us a few weeks, but do let me know, get on that wait list. Alrighty, so we've concentrated our positions, deployed that 200K all into one position because just the APRs are juicier. We're back into that $20,000, $25,000 a month. Really want to bump this up to around $1,000 per day, but I'm happy with this. Now, our next step is to hedge this position. I'm going to show you exactly how. We're going to go over to DeFiBuddy.io. That is a free tool. Make sure you sign up. You can find liquidity pools, manage your portfolio. You can even simulate your positions. Right now, we're going to go to the Underdog Investor Hedging Calculator. My pool value is around $200,000. My range is 2692 and 3288, and my estimated yield is around 143%. We're going to go continue to hedge strategy. I'm going to do one of my favorite, which is the break even at range, and I'm going to show you exactly what I mean by that. I'm going to click tell me my hedge, and before we get into all this mumbo jumbo, I do want to show you something here. This is vital. Please understand this. Here is my position right now worth $200,000. If I was in a naked LP, this is how the pool would perform. At the bottom of my range, you can see the orange one there. I would lose around $15,000 of value in my LP if the price went down to the bottom of my range. That's how much I want to hedge. I want to create a short where at the bottom of my range, I profit $15,000 so I can close up my position and get $15,000 in profit. Now at the top of my range, that's only $205,000. Remember the mechanics of an LP. Now your LP is non-linear, your short is linear. So right off the bat, depending how you set up your short, you're actually to be more profitable right off the bat if the prices go down. That can work in your favor. But if ETH starts jumping up in value, your LP value increasing will actually decelerate, whereas your short will remain constant. Very important to know, and you can see it on this visual. This is why we did this for you. By the way, this tool is completely free, DeFiBuddy.io. So you can see this LP plus your short. If the prices go down, you can see for a moment, you'll actually be more profitable if the price of ETH goes down right up until the lower bound of your range. Then you'll be perfectly hedged. You can exit your position, pull your profits, you're good. But if you stay in that position, do remember that your short will not keep up with your LP because of the way this is calculated. Now you can set up automations for most of this stuff, so chill. Now the opposite is true. If the price of ETH starts shooting up, your LP starts being converted into USDC and your short will be losing money, which is why I don't always set a hedge right off the bat. What I do is I automate the process. And this will definitely make for a great part 2, so let me know if you want a part 2. But what I can do here is, yes, I could open a short. My calculation here is telling me I need around $76,256 if I want to take 2x leverage. Now remember, you can be more capital efficient, which is probably what I'm going to do here. And I could take 3x leverage. My liquidation is still extremely healthy, and I wouldn't let it run. I'm willing to take a 1% haircut if I'm wrong direction. So with 3x leverage, it's going to be $50,000 margin. And again, I'm being a little sloppy here because I'm recording a video. Normally I do this like right at the same time, but I'm recording a video for educational purposes. So again, I'm going to be off by a little bit here, but normally I would open this position and right away I would go over to GMX. And if I'm bearish, I would open my short right off the bat and set a stop loss in case the prices increase. As of right now, I'm a little more bullish than I am bearish. So I'm actually going to set an order in for this short to open at a certain price point. Now that's going to be a part 2 of video, so this video is not an hour long. And at the start of this video, when you saw that the hedge didn't exactly match the LP value loss, I was off by whatever that was, $800 or $900. That's because there was a short delay. I was bullish when I opened that LP, but I set an insurance policy for myself in case the markets went the opposite way. They did. My short opened, I profited, and I damn near close broke even. I'm willing to take a 1% hit if I'm wrong. Think about that. Unlimited upside for very little downside, and my losses are capped. I have a plan going in. Really hope you got something from this video. I'm happy with this portfolio. I'm going to keep managing it and growing it. I'm taking profit. I'm building Aave positions, and I'm building a bull run bag. rinse and repeat. Boring does the trick, I promise you. With that said, I'm gonna get out of here. Let me know if you want me to continue this series. I know it gets a little more technical, but this is stuff you must learn, and I'd be happy to keep teaching it here on YouTube for free. Pick up a copy of the book on Amazon if you haven't yet. And with that said, like this video, subscribe to this channel, share this channel with anyone you think this can serve. Let's stop gambling and let's build investors. Let's turn into investors and let's educate others so they become investors. Share this video. That's all I ask. That is the cost of admission. And with that said, I'm gonna get out of here. Happy yield farming. Peace.